What's up guys, I remain your boy FX. So in today's video, we'll be looking at an important concept in trading, which is the concept of Fibonacci retracement. So we'll be looking at what is Fibonacci retracement and how can you use it to your advantage as traders. So we're going to dive into the chart and I will show you what it is and how you can actually capitalize on the opportunity that this tool has presented to us as traders in this industry. So if this is your first time of viewing my content, kindly make sure you subscribe to this channel and share this video to others so that they may also learn from it and increase their profitability as traders. Alright, there's a link to our Telegram channel which is in the description of this video. So kindly make sure you use the link to join our Telegram channel and participate in our free signal on a day-to-day basis. So without further ado, we dive into the chart and I will show you what is Fibonacci and what you can actually use this Fibonacci tool to do and how you can actually use Fibonacci retracement to your advantage as trader. So stay tuned guys.
So guys, here is my screen and I want us to look at what Fibonacci actually means before we can look at the applications of Fibonacci. So Fibonacci retracement is a tool developed by a great mathematician, and the idea of Fibonacci is because of his observation that price respects some significant some significant point in the market, which some persons may refer to as psychological level, and there is a huge reaction that takes place whenever price gets to this level. So he come up with this tool, and traders has evolved with the use of this tool to better their trading style, as this tool help us to know where we can anticipate a possible reversal or where we can actually look out for precision entry. So Fibonacci can actually be used to get a precise entry point in the market, and also we can actually look out for area or levels where there is probability of market reversing from. Okay, so there is something for those that some persons may use it for different reasons, but I'm just going to give you a general way of actually using this tool. So when you look at my screen right here, this is the trading view. Yes, the explanation goes for both currency pair and synthetic. Okay, so if you are trading currency pair, you are also covered. You just have to learn how to use it. So this is where you can find your Fibonacci tool. You can see that it is called Fib retracement here, and you see this tick here telling you that it has been added to my favorite watch list too. Okay, so to use it, there are two things you need to pay attention to. You need to understand your market range. You need to understand your market range. For instance, you need, if once you have been able to identify that okay, a particular market is trending towards the upward direction, like you have a bullish case, you have a bullish market structure, as you can see from my screen, which we have here as our sweep of the previous low, and we have here as our break of structure. So between this point here, between this point and this point here, we have our swing structure, and that is where you want to draw your Fibonacci. That is where you want to actually draw your Fibonacci. So if you pick up this tool from here, since this is a bullish structure, you drag from the bottom to the top. Okay, so you've drawn your Fibonacci tool. As you are seeing from my screen, there are different levels. I decided to use 0% level, 50% level, and 100% level because these are the ones that are very, very peculiar to my style of trading. You can actually use those the key important levels that you can look out for. I'll show you right here. The key important level that you can look out for. You can look out for 0%. You can look out for, all these are Fibonacci levels. All of these are Fibonacci level. All of these are Fibonacci level. So these are the various Fib level that we have. We have I think there is 23.8 as well. So let me include that. There's 23.8. Yeah, I think we're good. So these are the various Fibonacci levels that we have. There are even more, but these are the common ones. We have 0%, 23.6. We have 38.2. We have 61.8. But the ones that are very much important that you can actually look out for based on statistics is this one. So I'm just going to remove the ones that are, so that you can know which one to look out for. So I'm going to remove this, I'm going to remove this, and I'm just going to leave 0%, 50%, 61.8%, and this, I think, yeah, this, I think I have to remove, I'm supposed to remove this. Okay, this will go off. All right. Yeah. So these are the ones that have been tested. So how are you going to, capitalize on, or how do you make use of this after drawing? What you want to do is you want to actually wait for price to, pull back to any of this Fibonacci level, either to this level, and you look out for your continuation buy, or price will come to this level and you look out for a continuation buy, or price will get to this level here and look out for a continuation buy. So between this swing structure that we have here, we are expected to wait for price to fall to any of these Fibonacci level and you look out for your buy. Looking out for your buy, that means that you have to put into consideration your candlestick anatomy and all, so that when you see that candle reaction, or you can actually use Fibonacci as a confluence tool. It's advisable that you have a system of trade. You have what we call an edge, and then Fibonacci can actually be an added advantage, or as a confluence. You can use it as a confluence to better your entries. So for instance, if you have this as your POI, any of this level as your POI, and let's say your POI is on this particular level. If your POI is on this particular level, I'm going to be more interested in this level. After you must have done your analysis and then you decide to support your POI, you decide to draw your fib retracement to actually see if any of your POI coincide with any of the fib level. And you say that, okay, based on this marking, you already see that Fibonacci 61.8% is in confluence with your POI, and that will also increase that there is higher probability of this trade playing out. So you want to actually watch out for this. So this is a way you can select, because now it will look confusing that do I buy from 50%, do I buy from 61.8% or 71.8%. So once you have done your analysis, you can draw your fib retracement to actually look out for where this market is actually respecting. So if your POI is in alignment with any of the fib level, that is the particular point you want to watch out for your entry. So I want to actually show you how I trade using this Fibonacci tool and how I actually make my entry with it. Okay. So guys, my style of trading has to do with the advanced market structure that puts into consideration the concept of liquidity. So because of that, there are some things that I don't bother myself with while I'm using this tool. So I only, just like I said initially, I only use the 0%, 50%, and 100%. I'm just going to remove the rest of this tool. I'm going to remove this, I'm going to remove this, and I'll have just 0, 0.5 and 1, which is setting as 50% and 100%. Okay, so this is what I'm going to have. And if you ever want to set up your Fibonacci tool to look like this, once you draw it out, all you just need to do is to come to this setting and then select this level which I have marked out. Okay, so now that I have my 0%, 50%, and then 100%, what is expected of me? There is something they call premium and discount pricing. So premium level is a level where I want to look out for a sell, and discount level is a level where I want to look out for a buy. But since I'm in a bullish market, because the case study or our examples that we have before us is in a case of a bullish market. So since I'm in a bullish market, what kind of decision should I make? Or how do I actually, what am I expecting to do with what I have drawn? My expectation is I will wait for price to retrace down to the discounted zone before I start looking out for entry. So that means that, and above the 50% level, above this 50% here is what we call the premium region, and below the 50% here is what we call the discounted region. So if I want to look out for entry, I want to be patient for price to actually make that retracement. So everything that is happening around this point is none of my business. I want to see price come to this zone, break below this 50% level before I can actually start thinking of entry. Now the question is, when price get to this discount zone, like I have said, is it time for me to enter? The answer is no. I actually want to look for further confirmation to be sure that the decision that I'm making is more accurate, and that is when precision comes in. So for you to have a more precise entry, after you must have figured out where is your discount level, which is below the 50% level, and where is your premium level, which is above the 50% level. The next one is where exactly should I look out for my entry? So you want to drag your fib to this point where this break of structure occur. Okay, you want to drag your fib to this point where this break of structure occur, and you have a new 50% above and below. So this one becomes our new what is it called, our new premium level, and this one becomes our new discount level. Remember that I said that you take a buy from the discount level, okay, and say from what, premium level. So this right here is like this is which is what, above 50%. Sorry, is below. I'm talking about discount, is below, which is below 50%, and then which is what, above 50%. Okay, so this is what is expected of you. This is what is expected of you. You need to know that you are buying from the discount level, and which is below the 50% Fibonacci, and you are selling from the premium level, which is above 50% Fibonacci retracement level. So like I said, for you to establish where is your discount and where is your premium, you need to identify your swing structure, which is what I have just done. And I have seen that price has gotten to what, the discount level. That means that I have to start looking out for where to make an entry. Now, to look out for area of precision, you want to bring it to where this break of structure happens, and you have a new premium level and discount level. Now, everything that is happening inside, when you bring it to where this break of structure occur, everything that is happening inside here is just, to me, is liquidity. So I'm not looking out for any entry around this level. I only want to look out for entries around this zone. So once price decided to do something like this, and eventually come to this point, this is the area where I'm interested in looking out for entry. And I have to put into consideration my knowledge of candlestick anatomy before I can enter the market. So that means, in essence, what you should know is, don't trade Fibonacci 2 in isolation. You can use it as a tool of confluence to get more precision of the kind of decision you're making in the market. So let's just look at a chart example of what I am saying. Take for instance, this is the 4-hour time frame of this, and this chart actually look like what I have drawn here. Why do I say so? Because we have a sweep here, right? This is a sweep of a previous low, and then this is a break of structure. Okay, so this is a sweep of a previous low, and we are having a break of structure. So that means that our swing structure is between this point. Sorry, to draw my fib level, when I pick the fib 2, I will drag from the bottom to the top. Okay, from the bottom to the top. That is, in this case, I'm looking at the market as a bullish market. All right, so I'm dragging from the bottom to the top. If I'm seeing a sell, I will drag from top to bottom. Okay, so I've established my swing structure, and now I've also marked out my premium and discount level. So this point here is my premium level, and this point right here is my discounted level. So if I want to get what I'm anticipating now is, I am not looking for any buy from here, because market is still at the premium region, and at the premium region, price may decide to sell off from there. So I'm expecting that price will try to come inside this 50%, inside and below this 50%, which is the discount level, before I can actually start looking out for my entry. So when price gets to this point, the next thing I want to do is to what, drag this point, because this is where the break of structure occur, and then I'll drag fib to where this break of structure occur, and I'll be interested in this area. So I'll wait for price to eventually come inside this discounted level, and then I will look for my entry using the model that I consider to be my edge. Okay, so if you don't have an edge, you can actually watch my previous video to learn about how I actually trade, and then you can join the Telegram channel where I host free live class and drop free signal, so that you can actually see what is happening, and you may learn one or two things. We can even learn from each other, because no one is an island of knowledge. So this is how you can actually use Fibonacci 2, and I believe that this video you enjoy this video. So if you do, kindly make sure you subscribe to this channel if you have not done that, and then share this video to others and give us a thumbs up. So peace out, guys. I will see you in our next video.